All right, let's get right into it. The market right now is in a state of absolute contradiction. Seriously, we've got these huge catalysts building up everywhere, from Wall Street to Washington. But at the very same time, the average investor is, well, they're running for the hills. We've got to break down what is really going on here. Okay, just look at this. It's a tale of two completely different markets. On one side, you have Bitcoin pushing incredible highs, right around that $105,000 mark. But then you look at the other side. The Fear and Greed Index shows retail sentiment has just tanked. It's plummeted down to extreme fear. An index of 24? We haven't seen a number that low in months. This right here, this is the critical turning point we have to understand. So that leads us to the most important question we can ask right now. Could all of this widespread fear actually be the catalyst we've been waiting for? Is this panic the very rocket fuel that's going to ignite the next major leg up? Let's dig into the three big signals that suggest this might be exactly what's happening. All right, first up, let's talk about the big money. Our first signal is all about what the major institutions are doing while so many retail investors are panicking. And believe me, their actions are telling a very, very different story. So let's talk about this number, $300 million. After 2 straight weeks of money flowing out of the market, a net positive $300 million has just flooded right back into the spot Bitcoin ETFs. Those are the funds the big institutions use to buy Bitcoin. Now, sure, that number might seem kind of small compared to the billions already in there, but it's the sudden U-turn that's the real story. It's a powerful signal of fresh demand. And this isn't just random money. It's a clear message. You've got major players, outfits like Fidelity and ARK, leading the charge here. They see this fear-driven price drop as a golden buying opportunity. Their demand is literally creating a solid floor under the price, and it's basically soaking up all the panic selling coming from the retail side. It's a classic saying in the markets for a reason. This right here illustrates it perfectly. The smartest, most patient investors, they tend to buy up assets precisely when everyone else is full of doubt and fear. This wall of worry is exactly what they love to climb to reach new highs. Okay, now for signal number 2, and honestly, this one might be even bigger in the long run. We are seeing this massive shift where crypto is moving beyond just being something to trade. It's now becoming the core financial infrastructure, the actual plumbing for some of the biggest names on the planet. This is an absolute game changer. No other way to put it. Visa is using USDC, a stablecoin that's pegged to the US dollar, to pay freelancers all over the world, instantly. A stablecoin is no longer just a tool for traders to move in and out of positions. It's becoming a real, everyday payment vehicle for the entire gig economy. This is what mainstream adoption looks like. It's happening right now. And it's not just Visa getting in on the action. JPMorgan is rolling out its own JPM Coin, and they're doing it on a public blockchain, Base, specifically to serve their institutional clients. This means the giants of traditional finance are no longer just running little experiments. They are actively weaving blockchain into their essential core services. So who's the biggest winner in this whole wave of stablecoin adoption? Well, it's Ethereum. It is the undisputed king, the hub of DeFi and stablecoins. Every single one of these huge institutional transactions, they require network fees, what we call gas, which get paid in ETH. This creates real, sustained demand for the ETH token itself, and it makes the network more secure, building this incredibly powerful case for it to challenge its old all-time high. All right, our third and final signal, and this one might be the most powerful of all. It's coming straight out of Washington, where the regulatory momentum, which has been stuck in neutral for months, is about to get switched on in a big way. So with the government shutdown expected to end this week, the gears in DC are finally going to start turning again. That means agencies like the SEC and the CFTC can get back to business. And progress on key crypto laws, like the Genius Act, which is all about creating clear rules for stablecoins, can finally pick up speed. And let's be crystal clear about why this is so important. This regulatory clarity is the one thing that large conservative institutions have been waiting for. It is the final green light they need before they can start committing trillions, not billions, but trillions with a T, of capital into this space. This is the key that unlocks the next massive phase of growth. And this regulatory momentum isn't just some theory. It could have a real-world impact as soon as this week. The news is hot right now that the very first US spot XRP ETF could go live as early as this Thursday. This would be absolutely huge, not just for XRP, but for opening the floodgates for other altcoins, any crypto besides Bitcoin to get their own ETFs. So when you put it all together, you've got institutional buying, you've got infrastructure adoption, and you've got regulatory clarity. All of these powerful signals are pointing up. So how in the world do we navigate what is obviously an acceleration phase with some pretty high volatility? Okay, here are the key takeaways. This is the game plan. First, in a market this choppy, manage your risk. That means reducing leverage so don't get overextended by borrowing to invest. Second, take some profits off the table. It's always smart to sell a little bit as the price goes up to lock in those gains. Third, really focus your attention on assets that have clear, real-world reasons to grow, projects in payments, stablecoins, and tokenized real-world assets. And finally, you gotta keep a close eye on those ETF flows for both Bitcoin and now, potentially, XRP. They're a direct line into what the big institutions are thinking. Which leaves us with the biggest question of all. We can see the fear from the retail side, but we can also see the clear, methodical buying from Wall Street. So is that institutional pressure we're seeing right now strong enough to just power through all the fear and propel Bitcoin to that next massive milestone of $120,000? I want to know what you think. Drop your thoughts in the comments below.